Hello everyone, welcome to the Swing Trading Stock Market Outlook for the week of April 8th. Each week go through the same process just to see how aggressively I'm going to be deploying capital and where. So let's get to it. A few watch lists to pay attention to. The best swing trading stocks list for April, that's just high momentum stocks. And yeah, can look for trades in those. There's strategies and stuff linked within those articles, or you can check out this one here, which just shows how you can use those lists to very quickly find some opportunities. If you're ever wondering where this page is, because it does get updated if you're watching it on YouTube or something, you can go to stocks on the website tradethatswing.com, go to stocks, and under stock market analysis and trades, you'll always be able to find this article because it is updated each week. The current stock watch, this is actual setups that are forming right now. I have not updated this. I was sick last week, so hopefully I'll get to update it this week, but it hasn't been updated in a while. Let's look at how the indices are doing. We have a bunch of different indexes here, as well as gold and Bitcoin, so we'll get to those. You can see the NASDAQ, we talked about this last week, it's just getting a little bit choppier since March. And then we had this other period where it was a little choppy. We didn't make a whole lot of progress. So we can see we're just kind of like edging up when we do move up, but it's not really this euphoric buying like what we saw earlier in the rally. And the same with all these indices. NYSE was doing very strong. NYSE is a very broad based index because it includes stocks from all different industries, all different sizes. So a pretty good one to watch for kind of what the typical stock, how the typical stock might be acting. And maybe not typical is the wrong word, because what's a typical stock, but kind of on average what stocks are doing. And you can see it's gotten a little bit choppier too. March, moved up a little bit, was moving up a little bit again mid-March. And then, yeah, you're just getting this like little micro movements up and then flattening out again. Same with the S&P 500. We got flat near the start of the month, start of March. Then a little pop higher, but it just didn't really go anywhere and kind of petered out. And now we're moving sideways again. Russell 2000, yeah, really whipsaw, choppy trading as well. So what does that tell us? Well, it just says, hey, if you're noticing this in your trades, that's somewhat to be expected because that's what most stocks are doing right now. So trade a little less aggressively than you would when things are really running higher. This is the Canadian index, very commodity based, and it is doing very well. We're still getting that little bit of choppiness where it's not really in a strong surge higher, but it is still, everything's angled upwards, making new highs. So a little bit of choppiness, but overall making upward progress. Bitcoin, we've talked about this. It got back to this prior 2021 high and has been whipsawing around. That is common. That has occurred the last times this has happened, and it will whip around in a 20% range for a month or more. So we are into more than a month now of whipping around. And again, so that's kind of the minimum, is about a month. And then we get to see if the price breaks out. So, but it could be there for several months. So we're still seeing how this plays out. Ultimately, the price has resumed higher. But whether that happens this time, we don't know. But at least that's how I'm monitoring this at the moment. This is about a 20% range I drew on here. So, picking up buys near, I still have longs from earlier from this big rounded bottom. Sold some at the old highs, and now, trying to establish a few new shorter term positions. If I can get them near the lower end of this box, that's great. And if it takes off, great. I still have a position from before. So that's kind of how I'm looking at this right now. The gold miners, I was concerned on this initial breakout. The gold miners had really taken off with them as well, but we hadn't really seen a whole lot of confirmation. Now we're seeing that the gold miners and golds, this is the gold miners ETF and this is the gold ETF, and they are moving strongly together, and that's what we want to see during the big gold rallies. The miners come along for the ride and often lead for periods of that rally. And what I mean by lead is that you'll see them actually moving first. They always move more than gold. The moves are going to be much bigger. So I prefer to trade the stocks over the actual metal. I find the metal quite boring, actually. It doesn't move a whole lot in terms of capturing big percentage gains for swing trades, whereas the stocks can move a lot. So the stocks moved up about 10% last week, or over the last little bit. And so, yeah, we're seeing that confirmation, which I like. And also, I don't have crude oil up here or the energy stocks, but we're pretty much seeing commodity stocks in general doing quite well. And yeah, that's good to see. It gives us some action when maybe some of these other stocks that we might have been looking at before, maybe the technologies or whatever, aren't really acting how they were before. Now we have something else that's acting very strongly. So let's look at the market health indicators. So what these are is they kind of look under the hood of how the stock market overall is doing. So this is a S&P 500 chart. And you can see that we had the downtrend back in 2022, and then we've had this upward trending period. So let's look at this. This is how many stocks are above their 50-day moving averages. The red line is S&P 500 stocks. The blue turquoise is all U.S. stocks, and 71% of S&P 500 stocks above their 50-day moving average, 54% of all U.S. stocks above. So it's still good. I like to trade long when these are above 50, and if you just kind of look at the periods where they were above 50, that tends to be better times than when they're below, and just helps us avoid getting caught in these sideways periods or the downtrending periods. So these are okay, but you can see that all U.S. stocks has been really just hugging that 50 line. So while it technically fits into the good, it's above 50, it's just not quite ideal. So it just tells us to be a little bit more cautious, and basically it's been telling us that for quite a while, like several months. And even though the S&P 500 went up, we talked about how the other indices, we've just, the big moves had kind of dissipated by this point, and it was just, little kind of choppy moves higher. So it's been you've probably noticed maybe a little bit tougher trading the last little while compared to when we first started running out of higher in late 2023 and even early 2024. Moves were a little bit bigger, more convincing, and it's flattened out a little bit. And this indicator just helped us. If we didn't see it on the price action, we could have seen it on this indicator, or we did see it on this indicator. Volume not important to me at the moment. Rate of change is just the S&P 500 daily percentage movements, and what this one's really looking for is 2% drops in a single day, because that indicates extreme selling pressure. And I find when one of those happens, it's usually best to just step away for a few days and see what happens. Either the price will chop around for a while and then ultimately continue higher, and we haven't really missed out on anything. We can start looking for longs again, and if the price keeps dropping, we saved ourselves from holding ourselves through a drop, because those 2% down days are usually a good indicator that things are shifting. You can see we have not had a 2% down day, that's this bottom red line, in a very long time. So especially through all through this recent rally, we haven't had anything even really super close. A couple got not too far away, but I want to see that 2%, or I don't want to see it, but when it happens, it tells me to stay away, and we haven't had one of those yet. So when we get one, we'll step away, but for right now, it's still a smiley face, because this is bull market behavior, which means we don't get those really big intraday drops like what we can see here occurs often in 2022 when we were moving lower. You get just lots of big drops in days because people are wanting to get out of their positions. Right now, still in bull market behavior. This is the NYSE advanced decline line. Advancing stocks minus declining stocks is a cumulative number, and it's marching up along with the S&P 500's flattened out a little bit here as the S&P 500 is flattened out. So overall, it's moving up. That's a good thing. It hasn't turned down hard, but it has flattened out. So it's still a smiley face, but it's basically just confirming what the S&P 500 is doing. So not giving us a whole lot of information there. And this one also not important at the moment, just because it hasn't given us any signals. It's up volume divided by total volume, and it just tells us whether there's extreme buying or extreme selling hitting these upper black lines or the lower black line, and we've just been jostling around in the middle here. So nothing important there. The ultimate indicator, how many quality setups there are and how trades are working. All I've noticed recently is that commodity related stocks are running and everything else seems very mixed that I've been looking at. So that means of everything else outside the commodities, I'll get a few that run, and then everything else is just kind of like chopping up and down, or a lot of even started dropping, like names that were doing well before are starting to turn lower. And so the commodity related seems to be where the action is right now. If we go to the sectors on the move, that's basically what we're seeing. Energy, basic materials, communication services, industrials. These seems to be the ones where the action is. Energy last week, basic materials also in there. Communication services, industrials, a little bit lower but still in the top of the pack. We go to the 1 month, energy, communication service, basic materials, industrials. Those are where the moves are happening. And over the longer term, since these have just kind of are getting into their bigger moves, they haven't quite fully transitioned to the top on the 3 month, but you can see they're all starting to move up. Industrials, energy, basic materials starting to make a move and recovering from some of the prior downswing, which we had talked about when I talked about here, because we had GDX really moving down, and we've had a big resurgence. So if you look at this, like kind of over the last few months, it's only up a little bit, but it's been very strong over the shorter term, right, from March onward. But if you kind of look at over the last 3 months, it's just kind of moving up into profitable territory. So we got to keep that in mind when we're looking at these different time frames. It sometimes kind of helps to imagine what some of these charts might look like. And so even though basic materials, which includes the metals and things like that, is near the middle of the pack on the 3 month, we can see it's making its surge in the shorter term. So it'd definitely be one to keep an eye on. And so what am I doing right now? Well, I'm deploying capital on long trades. Still a bit cautious because things are not ideal, especially in the other sectors. Things are looking really good in the commodity sectors right now. So maybe being a little bit more aggressive in the commodity type areas and less aggressive and less prone to putting in capital into the other sectors at the moment, just because we've noticed that they've been a little bit choppier. And then there's always the option to day trade and passively invest or actively invest and all those things. So those are things I'm always doing in the background as well. But for the swing trading, focusing on the commodities right now.